Hey guys, welcome to this quick video. So in this video, I'll be talking about 4 quick facts about cryptocurrency, right? So if you are considering to invest in crypto or Bitcoin, you're considering about selling, it's important to understand the critical facts about cryptocurrency in order to make the right decisions when you're trading in Bitcoin or any other cryptocurrency, right? Yes, you can buy blindly by buying and holding, but then you will not know the mistakes that happens if you do lose. So it's really important to understand the critical facts about Bitcoin in order to improve your decision-making skills and improve your likelihood of having success and making profits with trading in cryptocurrency, right? So let's talk about first fact. Number 1, Bitcoin is going to have 21 million units in circulation, which what that means is there's going to be 21 million Bitcoin coins in total circulation. It's capped at 21 million. After it reaches 21 million, there will no longer be any more Bitcoin units in the marketplace. This was designed specifically by Satoshi Nakamoto when he programmed the system, when he designed the system, the blockchain Bitcoin blockchain network system back in 2008. And the reason for that is to mitigate against the risk of inflation. So, for example, we all know that the US dollar has been depreciating in value since its inception. For example, $20,000 today does not have the same purchasing power as it did 10 years ago or 20 years ago, right? It's been depreciating in value year after year. This was designed, of course, specifically by the central bank, by the Federal Reserve, in order to maximize their wealth, right? So, in the Bitcoin world, Satoshi knew about this risk of inflation, so he designed it to have a maximum circulation of 21 million units in order to mitigate the risk of circulation, because he believed that in economics, the cryptocurrency or the price of a currency should be determined by the supply and demand and not by a centralized control authority, right? And please note that today, approximately 18 million units of BTC or Bitcoin have been mined up to this point. How long is it going to take to reach 21 million? Nobody knows. It's based on speculation and maybe some basic calculations. The second fact, fact number 2, it's decentralized. Bitcoin is completely decentralized. There's no central authority that owns and controls the blockchain of Bitcoin. There's no bank or CEO that can change or modify or increase transactions on Bitcoin. It's completely decentralized. It's owned by the community, right? And again, this is an advantage to mitigate against the risk of fraud or bad activities or malicious activities, as we've seen in the financial crisis in 2008. Remember, Bitcoin was created in response to the financial crisis in 2008. So now it's safe to say that if the financial crisis in 2008 did not occur, we would probably not have Bitcoin created by Satoshi Nakamoto. It's safe to assume that point. Number 3, transactions are immutable, right? Which means that any transaction you make on the Bitcoin network or even on Ethereum network or even on the Litecoin LTC network, you can't change or modify the transaction. I cannot call the bank or the Bitcoin developer and say, I want to be able to change this transaction, which I did last week or a month ago, right? It does not work that way. Again, this was designed to mitigate the risk of fraud activities and malicious actors or malicious activities that can be committed by malicious actors on the network, right? It's a safe mechanism to protect the users from bad actors or malicious attackers on the network, right? So transactions are immutable. If I send you 5 Bitcoin, I cannot go back and change it and reverse it. I have to convince you that I send you 5 Bitcoins by mistake, and please send it back to me. And only you, if you are convinced, you'd be able to make that decision to send me those 5 Bitcoins back into my wallet address, all right? And the final fact, it's a community-based. Number 4, it's a community-based system. It's based on the mining community or the miners of the network. So it's based on volume. Miners are the people who mine the transactions and they verify and authenticate the transactions on the Bitcoin network, and they add the blocks on the chain. They are the people who confirm the transaction and add. Once a block is added, it cannot be changed, modified, or deleted. Again, it's power in numbers. Now, what is the risk of this? What are some of the risk factors? The biggest risk on the Bitcoin blockchain is the 51% hashing attack, which states that if 51% of the mining community collude together and combine their hashing power, their computing power, and they reach that 51%, they can modify, change, and compromise the entire network, right? Now, the question is that likely to occur? Not really, right? Because now you have over hundreds of thousands of people mining on Bitcoin. If someone told me, let's say 10 or 11 years ago about Bitcoin, I would be very reluctant to even buy into it because there is very limited small number of miners. Let's say if there was 100 miners, 51% of them can easily collude together and combine their computing power to be able to change, modify, or delete numbers on the network, right? But now that the network has grown in hundreds of thousands of users and miners all around the world, it's less likely that 51% of them would be able to collude and combine their hashing power to be able to change or modify transactions on the network, right? So this is one of the advantages and disadvantages. So overall, investing in cryptocurrency has advantages and disadvantages. The biggest advantage is that it's not prone to inflation. Yes, the price has been going up and down, but basically all because of supply and demand, right? Satoshi said he theorized that the market dynamics of a currency should be determined by the supply and demand of the market and not by a centralized regulating authority, as we've seen now, as we have today in central banks across the world who own and control the supply of money within each country, right? This again mitigates the risk of inflation and hyperinflation, such as in cases that we've seen in Venezuela and Cyprus and so on. And this concludes the 4 facts about cryptocurrency. Thank you guys for watching. I appreciate it, and I'll see you guys in the next video.